Hello and welcome back to Explain the Charts. Today is October 20th, 2025, and we are diving deep into Litecoin or LTCUSD. The air is thick with anticipation and volatility as the entire crypto world holds its breath for one major event, the potential approval of a spot Litecoin ETF. We've seen headlines predicting everything from a new bull run to a catastrophic crash, and the price action has been just as wild. In today's analysis, we'll first break down the latest news driving this market sentiment. Then, we will meticulously analyze the daily, hourly, and 15-minute charts to identify key levels and map out potential scenarios. Let's get straight into it. The overwhelming narrative right now is the impending SEC decision on a spot Litecoin ETF. Prediction markets like Polymarket are giving it a 95% chance of approval by the end of the year, fueling immense bullish speculation. Analysts are pointing to amended S-1 filings, which now includes specific fees, as a sign that approval is just around the corner. This has led to some incredibly bullish long-term price targets, with some analysts calling for a rally to $400 and one even predicting a long-term target of $750 based on a multi-year chart pattern. On-chain data backs this up, showing significant whale accumulation during recent dips, suggesting large players are positioning for a major move up. However, the sentiment is not one-sided. We also have reports highlighting a recent, brutal 23% plunge from around $134 down to below $100. Some analysts are issuing stark warnings that if Litecoin fails to reclaim key levels like $105 soon, it could see another major drop, possibly to the $76 support zone. This creates a fascinating and high-stakes environment where the news is driving extreme hope and fear simultaneously. This battle between long-term bullish fundamentals and short-term bearish price action is what we'll explore on the charts. Looking at our daily chart, you can see this story play out visually. From June through September of this year, Litecoin was in a prolonged consolidation phase, trading mostly in a range between $60 and $80. Then, as the October crypto rally began and ETF hype intensified, we saw an explosive move to the upside. Price broke out of that range and went on a parabolic run, culminating on October 10th. Now, look closely at this candle from October 10th. It is the epitome of volatility. We saw an intraday high of nearly $136, but also a catastrophic flash crash with the wick extending all the way down to about $55. The price was aggressively bought back up, but it closed the day at $97, representing a massive rejection from the highs. This candle signals huge profit-taking and tells us that the $135 to $140 area is now a formidable wall of resistance. Let's zoom in on the more recent price action since the beginning of September to get a clearer view of the critical levels we're dealing with now. Since that massive crash on October 10th, Litecoin has been trying to establish a new support base. We can clearly see that the $90 level has become a critical battleground. Notice how the price has tested this level on October 11th, the 14th, 16th, and 17th, and has managed to hold it each time. This makes $90 our most important immediate support. A break below this would be a very bearish sign. To the upside, we face immediate resistance in the zone between $100 and $102. This area represents the recovery highs after the crash, and the market has failed to hold above it. This aligns perfectly with news reports stating that reclaiming the $105 level is crucial for bullish continuation. So, the current market structure is a clear consolidation range, roughly between $90 and $102. A decisive break of either of these boundaries is likely to signal the next major directional move. Now let's switch to the 1-hour chart to analyze the texture of this consolidation. Here we can see the choppy, sideways action since the October 10th volatility spike. What's interesting on this shorter time frame is that the price action appears to be forming a symmetrical triangle or a wedge pattern. We are seeing a series of lower highs, but also higher lows, coiling the price tighter and tighter. This is a classic consolidation pattern that typically precedes a significant breakout. Volume has also been tapering off, which further supports the idea that energy is building for a move. Traders should be watching these trend lines very closely. A breakout above the upper trend line, currently around $95, would be a short-term bullish signal, targeting the range high near $100. Conversely, a breakdown below the lower trend line, near $92, would be bearish and would put the major $90 support level at immediate risk. For a micro-level view, if we briefly look at the 15-minute chart, we can see the battle for these levels in real time. In the most recent trading sessions, the price has been oscillating in an even tighter range. This time frame is useful for intraday traders looking to play small moves within the larger consolidation pattern. For example, a rejection from the local highs could be a quick short opportunity back down to the local lows. Ultimately, the big money will be made by catching the breakout from the larger pattern we identified on the 1-hour and daily charts. Alright, let's switch back to the daily chart and recap everything we've discussed and lay out the potential scenarios. The key price levels you absolutely must have on your radar are as follows. Our major overhead resistance is the recent peak from $135 to $140. The immediate resistance and first major hurdle for bulls is the $102 to $105 zone. Our most critical, must-hold support level is right at $90. If that $90 support fails, bearish targets open up at the $76 level mentioned in news reports, with further support down in the mid-$60s. So, what are the likely scenarios? Given the powerful narrative of the ETF, the on-chain whale activity, and the fact that we are currently holding a key support level, I would assign a slightly higher probability to a bullish resolution. I see a 60% chance that Litecoin continues to consolidate above $90 before eventually breaking above the $105 resistance. This scenario would be reinforced by any positive news or rumors regarding the ETF approval. A successful breakout would open the door for a retest of the $120 area and then the $135 highs. The bearish scenario, which I'll place at a 40% probability, would involve a failure to break above resistance and a subsequent breakdown below the $90 support. This could be triggered by negative ETF news, a delay, or simply a broader crypto market downturn. A confirmed break below $90 would likely cause a rapid sell-off, bringing the $76 target into play very quickly. The main thing to watch for in the coming days is the SEC decision itself, and secondly, a volume-supported breakout from the current consolidation range between $90 and $102. Finally, please remember that this analysis is for informational and educational purposes only and should not be considered financial advice. The cryptocurrency markets are extremely volatile and carry a high degree of risk. Always conduct your own thorough research and consult with a qualified financial advisor before making any investment decisions. Thank you for joining us on Explain the Charts, and we'll see you in the next one.